watching India Today.
We have some news just coming in, and protests continue over Aravallis in Rajasthan. Congress students' wing has hit the streets. Massive stir in Udaipur over Aravalli. NSUI students climb on barricades. Pictures on your screens at this point in time. Cops try to block the protesters in Udaipur. Members of the NSUI and other organizations demonstrating in front of the district collectorate in Udaipur on the Aravalli Hills controversy. Sharad is getting in more details in that story. Sharad, जब से सुप्रीम कोर्ट ने रीडिफाइन करने की कोशिश की है अरावलीज को एनवायरनमेंट मिनिस्ट्री के प्ली के चलते, ये प्रोटेस्ट इंटेंसिफाई हो गए हैं। जो अरावलीज के एरिया में काम करते हैं वो साफ तौर पे ये कह रहे हैं कि इकोलॉजी का मैस होगा, और इसके अलावा ये मामला पूरा पॉलिटिकल भी हो गया है। कांग्रेस के अशोक गहलोत ने इसको सबसे पहले उठाया था और अभी एनएसयूआई प्रोटेस्ट कर रही है।
देखिए, ये मामला पॉलिटिकल ज्यादा है इसलिए कि राजस्थान में बहुत कम लोग जानते हैं कि राजस्थान में 100 मीटर का फॉर्मूला अभी लागू है। राजस्थान में जो खनन हो रहा है 100 मीटर के फॉर्मूले से लागू हो रहा है, और रिचर्ड मर्फी का ये फॉर्मूला अशोक गहलोत ने लागू किया था, और उसी अशोक गहलोत के फॉर्मूले को भूपेंद्र यादव केंद्र सरकार की तरफ से बाकी राज्यों में लागू करने के लिए गए हैं। तो ये एक पॉलिटिकल मूवमेंट कांग्रेस का ज्यादा नजर आ रहा है, क्योंकि जो भी 100 मीटर का फॉर्मूला है वो कांग्रेस का इजाद किया हुआ है, कांग्रेस राजस्थान में लागू कर रखी है। अभी इसी 100 मीटर फॉर्मूले के तहत राजस्थान में पूरे अरावली में खनन हो रहा है। तो इसलिए ये जो भूपेंद्र यादव ने दिया है, इसी राजस्थान के फॉर्मूले को उन्होंने राष्ट्रीय स्तर पर लागू करने के लिए कह दिया है, जिसे लेकर बवाल मचा हुआ है। और बाकी ये मानना है कि जब अशोक गहलोत ने पहली बार 2003 में मुख्यमंत्री थे तब इस फॉर्मूले को लेकर आए थे, तब उन्होंने कहा था कि जो खान लागू चल रहे हैं उन खानों को बंद न करने दिया जाए, हम नए खान नहीं चालू करेंगे। मगर राजस्थान में 160 मीटर के 180 मीटर के पहाड़ को 100 मीटर के नीचे दिखाकर अल्टीमीटर से नाप कर और सरकारों ने इजाजत देना शुरू कर दिया, और अब हालत यह है कि अरावली हर जगह से अब खोदी जा रही है। तो एक तरह से ये 100 मीटर का फॉर्मूला तो पूरी तरह से पिट चुका है। राजस्थान में कई मुकदमे हुए हैं, कई अधिकारियों के खिलाफ केस दर्ज हुए हैं जो 110-180 मीटर के पहाड़ को 90 मीटर 80 मीटर बता के और आवंटन कर देते हैं। तो यही डर है कि अब इसको पूरे लीगलाइज न कर दिया जाए 100 मीटर को, अगर सुप्रीम कोर्ट स्वीकार कर लेता है तो फिर पूरे राजस्थान में यही काम शुरू हो जाएगा।
शुक्रिया सर जुड़ने के लिए। शरद कुमार getting in those details and explaining why the Aravallis, the entire stretch is important for the northern and western Indian region. Now the government is busting what it calls misinformation on the Aravalli controversy. Environment Minister has said Aravallis are still protected, claiming only 0.19% is eligible for mining. Says no mining in most of Aravallis. Listen into this interview.
अरावली में बहुत बड़ी संख्या में प्रोटेक्टेड फॉरेस्ट है, रिजर्व फॉरेस्ट है, वो भी पूरा इसमें संरक्षित है। फिर जो इको सेंसिटिव जोन है उसका जो 1 किलोमीटर का एरिया है वो भी संरक्षित है। इवन जो ड्राफ्ट इको जोन है उसमें भी सुप्रीम कोर्ट के रेगुलेशन के हिसाब से संरक्षण है। और इसके अलावा अरावली के क्षेत्र में बहुत सारी झीलें भी हैं, और कुछ झीलें ऐसी हैं जो हमारी रामसर साइट्स भी है। अब जैसे गुड़गांव में सुल्तानपुर की झील है, अलवर में सरिस्का की झील है, उदयपुर को रामसर साइट्स में पूरा लेक सिटी ही बनाया गया, उसके भी 500 मीटर तक के एरिया जो है संरक्षित क्षेत्र में है। तो इस हिसाब से अरावली में एक एक्टिविटी जो माइनिंग एक्टिविटी भी है वो मैं आपको कह रहा हूं 0.19%, 1% से भी कम एरिया में ही माइनिंग हो पाएगी, और वहां भी माइन को कोई खोला नहीं है। 58% भाग जो है वो तो खेती है, फिर हमारे नगर हैं, हमारे ग्राम हैं, हमारी ढाणियां हैं, फिर उसके साथ हमारा प्रोटेक्टेड एरिया लगभग 20% तो प्रोटेक्टेड एरिया है, जिसमें तो आप कर ही नहीं सकते, चाहे वो जमीन हो, छोटी पहाड़ी हो, बड़ी पहाड़ी हो, कर ही नहीं सकते। पहले साइंटिफिक प्लान होगा, ICFR होगी, उसके बाद सोचा जाएगा। पर मैं बिल्कुल स्पष्ट रूप से बता रहा हूं 0.19% से ज्यादा में हो ही नहीं पाएगी।
All right, we're shifting focus. I'm going to go straight across to my colleague Sakshi Batra of Business Today Television with all the updates of the markets. Over to you, Sakshi.
Thanks a lot, Sneha. Hello and welcome. You're watching the Business Today show. This is the 3 p.m. show where we get you all the market closing action. But first up, let's take a look at what's hot in the corporate and the financial world. India seals its third free trade deal this year. Agreement with New Zealand to deliver zero duty access for all Indian exports into the Kiwi market while protecting politically sensitive sectors at home. The pact also opens up the country down under for Indian students and also professionals. New Zealand will also be investing $20 billion in India. COMEX gold hits $4,400 for the very first time on Federal Reserve's rate cut expectations, while silver also reaches a new high in New Delhi. 24-carat gold prices now soar to 1.35 lakh rupees per 10 grams, with silver now climbing to 2.3 lakh rupees per kilogram. Markets extend their rebound, with Sensex now surging 1,000 points over the last two sessions and the Nifty crossing 26,100 mark. The rally is supported by a stronger rupee, optimism over US rate cuts, as well as gains in IT and metal sectors. Railway stocks are buzzing in trade after Indian Railways raise fares by about 10 rupees, with IRCTC, RVNL, IRFC, Railtel and Jupiter Wagons seeing gains of up to 14% in trade. Investors are also eyeing potential capital expenditure announcements in the upcoming budget. Foxconn makes a bold move, hiring 30,000 staff at its new women-led iPhone assembly unit near Bengaluru in under a year. The facility, set to be India's largest, strengthens Apple's supply chain diversification, with 80% of production aimed for exports. Good afternoon. You're watching Market Today's show. Let's quickly look at how the stock markets are trading at this hour. 26,178 on the Nifty. Remember, the rebound that started off on Friday last week is continuing, with us now at day's high point on the Nifty. 26,178, 0.8% of an uptick. Look at all the sectors that are in deep shade of green today, and IT stocks are leading from the front with over 2% gains right now. Yes, it's at the day's high point. Look at the metals, they're shining the brightest. You can see almost a 2% uptick there as well. The broader market names are also finally claiming some ground. Small caps, mid caps, those are the sectors that are performing well. Autos, infra, all of the sectors nearly are actually up and about in trade. Shriram Finance is the top mover on the Nifty. It has been so over the last couple of sessions. Remember that big acquisition from MUFG has fueled some more fire in Shriram Finance. Trent, Infosys, Wipro, Bharti Airtel, these are all the stocks that are leading from the front as well. Let's actually quickly look at how the rally is shaping up as far as precious metals is concerned, as they are shining brightest. In spot market, 24-carat gold prices have soared to 1.35 lakh rupees per 10 grams, with silver spot prices now at 2.3 lakh rupees per kilogram. Earlier, I also spoke to Ajay Kedia, the MD and Director at Kedia Advisory, on what's the outlook for both these precious metals in 2026. Let's listen into that first.
In 2026 also, see, whatever the factor up till now we have discussed has not vanished. Slowly and steadily, one or two factor would be definitely maturing, but I think that things have been still going on. So I think don't expect whatever the return up till now we have seen like 60-70%, but then also I am expecting 15 to 18% is a narrow down if we do things. So I think 15-18% can be easily achievable. That is around 4,800 we can see for gold in international. Whereas domestically, we can see prices can move closer to 1,50,000. silver is not a new gold, but we can say silver is silver because up till now, Sakshi, we have never seen this kind of industrial demand in silver. In 1980, no doubt, we have seen prices move to $50 mark, and we have seen after Hunt Brothers was cornered silver, we have seen correction also in 2011 also. But this time the scenario is totally different because the use case for silver has expanded from clean energy, EV, solar, or data center. So this has been even there was a news that in EV's car, there has been a technology shift where silver can give a better performance. So I think industrial demand and side by side ETF demand has pushed the silver to the level what we have seen today. In international, we are very close to $70 mark, which has never been seen. One indicator that I used to update every time, that is gold silver ratio, which is currently around 63 level, and it used to be around 107 in the month of May. Whenever this ratio comes down, that means silver is more attractive as compared to gold. So I think still I will be more bullish, but be cautious in gold and silver because volatility is going to be very high. A corrective dip like we have seen in the month of May or October can be possible, but I think $75 to $80 mark can be seen in international in 2026, and whereas on domestic side also maybe we can conservatively can test $250,000 plus.
Well, in case you too are finding out as to what should be your strategy on gold and silver, but then watch this full interview on Business Today YouTube, on Twitter, on our website and other social media handles as well. That's flashing on your screens. Let's quickly welcome Sneha Podar, our market guest of the day. Sneha, a warm welcome to you. Good afternoon. Good to have you with us. Well, finally, we are seeing a deep shade of green and the festive cheer that's finally entering the stock markets as well. Give us an understanding of how are you looking at the markets now? We are finally above that 26,170 odd mark again today. Is the worst behind of the volatility that we have been facing for many, many months now on the Indian stock markets?
Hi, good afternoon, Sakshi. Thank you for having me on the show. Today is a big relief for the market participants, but then let's not get into this euphoria that all the worst is over. Basically, for past 3 days, FIs have turned into buyers and rupee has strengthened a little, which is providing some sort of support to the market. Moreover, there are high hopes that the Fed will continue with its rate cut, which has led to the positive sentiments towards the market. But then let's not forget that FIs have not completely become buyers in the market. Just 3 days of buying does not really confirm that trend. And moreover, now with the we entering into the festive season with Christmas and New Year in the hindsight. So the overall volume in the market, the overall activity in the market will actually become very thin. So market may not really do much in the last week of December. In fact, we might see a lot of consolidation happening, and January, we can expect a lot of volatility because it would be a month just prior to the budget. So usually January sees a lot of volatility and a lot of sectoral rotation. And let's not forget that still there's not much confirmation in terms of mid and small cap coming back in big action. So my suggestion or my advice would be to stick to large caps and be very selective with regards to mid and small cap.
Fair point. So there could be some volatility in the first month of the new calendar year as well. But viewers, all our eyes on how India's trade agreements are shaping up. India and New Zealand now have wrapped up a free trade agreement that New Delhi is now calling both ambitious and carefully shielded. For Indian exporters, the headline win is simple and huge: zero duty access on 100% of New Zealand's tariff lines, meaning every Indian product entering that market goes in duty free. On India's side, the government has also opened up about 70% of tariff lines, covering nearly 95% of the current trade, but has also drawn a hard red line around politically sensitive sectors from dairy and sugar to select animal, vegetable and metal products as well. What truly sets this pact apart, though, is that human capital chapter. Remember, a separate big ticket mobility package for students and professionals that effectively turns New Zealand into one of the most open OECD markets for Indian talent is going to be seen. This includes 5,000 rolling working visas, locked in, of course, part-time work rights for students and multi-year post-study visas for STEM and postgraduate degrees as well. well. New Zealand, meanwhile, will also invest $20 billion in long term, backed by a rebalancing clause if the money does not materialize. Let's listen into New Zealand Prime Minister and Union Minister Piyush Goyal on the same.
This is a free trade agreement with New Zealand, which is both comprehensive and forward-looking, reflecting the vision of our two leaders, Prime Minister Modi and Prime Minister Lakson, to elevate the relations to much higher strategic levels, much more comprehensively, which will not only include trade, education, R&D and innovation, services sector in a very big way, tourism, sports. It's a very multifarious engagement, particularly to benefit our farmers and dairy through technical collaboration, which will help them upgrade quality, productivity, and therefore the incomes of our farmers and dairy persons.
Today is a big day for New Zealand. We have just concluded a free trade agreement with India. Now, this may not sound like a big deal for you, but trust me, it really is. And here's how you'll benefit. This is a landmark trade deal, reducing or removing tariffs on 95% of our exports to India. And of course, that makes it easier for Kiwi businesses to sell more of what we produce to 1.4 billion customers in one of the fastest growing economies in the world. And when New Zealand businesses can sell more, they grow. And when they grow, they hire more people, and that creates opportunities right across the country. More jobs and higher wages for Kiwis. Trade already supports 1 in 4 New Zealand jobs, and this deal strengthens that even further because it backs our farmers, our growers, our manufacturers and our exporters to compete and win on the world stage. And this deal will grow the economy and it will build long-term security for Kiwi families. We said we'd secure a free trade agreement with India in our first term, and we've delivered. National is fixing the basics and building the future.
Meanwhile, viewers, there's also a twist to the story with the New Zealand Foreign Minister now opposing the FTA. Winston Peters, the leaders of a New Zealand First Party, which is part of the ruling coalition, has now tweeted that his party is opposed to the deal as it gives too much away, especially on immigration. He has also added that New Zealand does not get enough in return, particularly in the dairy sector. For more on this, I'm also now joined by my colleague Karishma Sudani, who's been tracking this story closely. Karishma, what is the special arrangement on agri exports from New Zealand to India in FTA? Is that also getting opposition from the foreign minister?
Well, I think one of the big strengths of this FTA between India and New Zealand is the fact, the action plan that they have arranged when it comes to the agri exports. Now, let's not forget that India has taken a strong stance on the fact that they will never budge on agriculture products which are very close and sensitive to India's sector, and India's Trade Minister Piyush Goyal has time and again really batted this globally. Well, when it comes to our FTA with New Zealand, what we have focused and noted is that this action plan, which is being done across 3 different products, is kiwis, a certain kind of premium honey and apples in a limited quota system will be exported from New Zealand to India. And while they're exported from New Zealand to India, this arrangement will also kind of help in training the Indian exporters and the Indian market to be able to produce that kind of premium product, which will in turn benefit the Indian market. So this is one of its kind action plan in terms of the agri products that India and New Zealand have been able to conclude, and they're looking to really upscale this in the coming days for the benefit of both the countries.
Right. And Karishma, this is being seen as the 7th FTA clearly for India. Before that, we've had an FTA signed with Oman, with the UK. We've also seen UAE, Australia and Mauritius as well. How are these current 7 FTAs really performing under Modi government, and what more can we expect on this?
Yeah, so in the last 10 years, there have been 7 FTAs that have been successfully concluded. This year, let alone, has seen 3 major FTAs being signed, one with the UK that we recently had. Oman was just last week, and now it is this. In fact, EU and US have also been in advanced stages. Business Today last week also reported that around January 7 to 9, Indian delegation team will be traveling to the EU for conversations, and they'll also be traveling to the US. They will also be in constant touch with the US in order to see some kind of positive outlook. So not very far are we from having more FTAs, and this is going to benefit Indian trade market on a global scale, and also kind of promotes the diversification of exports.
All right. Thanks a lot, then, Karishma, for getting us all of those details there on the FTA front. Let's go across to Sneha Pudar once again and try and understand how are the markets really looking at all these critical FTAs that are being commissioned at this point in time. Of course, the biggest overhang is still the US-India, trade deal that has so far evased us all through this 2025, and even now we are just waiting for a finalized date to come in when this deal will be signed. How are you looking at otherwise how the markets look at these FTAs, the trade data, and of course how things are shaping up on that front, especially the FII money?
Okay, so Sakshi, as you said, India-US trade deal is the biggest deal that everyone is waiting for. But then definitely these small trade deals really help us to diversify away from US market to other countries. So it provides kind of some comfort to the export-oriented countries. At least they have other markets to focus on rather than only focusing on just the US market. So though immediately we might not see the benefit of these FTAs, but then in the long run, this will really help the companies to have a very well diversified portfolios in terms of different countries, and plus various other opportunities gets open in terms of many sectors can be tapped into when we have many countries under under FTA. So that will open many new sectors for the export potential. So definitely these small steps will help us strengthen our positioning on the global world map. But having said that, obviously India-US trade deal will be one of the biggest deal which is largely awaited, and which will provide the clear-cut direction to the market. These smaller deals, though they are positive from the overall long-term perspective, but then they wouldn't really help us to move the needle in the from the short-term perspective.
Right, absolutely. I also wanted to focus on specific sectors. Now, let's start off with the IT sector. That's the outperforming sector today. It's the top performing sector, 2% higher in trade. All through this year in 2025, you've seen the IT sector, because of its export-oriented nature, continue to feel the brunt of any kind of negative news flow that came in by way of, trade information and, negative news flow on that account. Finally, the IT sector is now pulling up in pace. How are you looking at this sector?
So see, IT sector, why it has started moving is, let's just understand this. Basically, with the expected Fed rate cut, the overall outlook with regards to US economy is changing, because the Fed rate cut will actually help the US economy to recover, which has taken a lot of beating because of the various trade deals that the US had entered with several countries. So US economy had suffered because of this, but now with the with the potential Fed rate cuts, probably the economy will revive, which will help the Indian IT companies to actually benefit, because they largely rely on the US market. Though European market and other markets are also important, but then our major reliance is on the US market. So it's very important that the US economy revives, and that is what is reflecting in the overall IT rally. Moreover, what we also believe is that the AI overall cycle is expected to start soon from next year onwards. So we are just at the beginning of that new cycle, and the stage is being set. So once in March, when the overall budget gets decided by the various countries, various companies with regards to their next year spending. So then these AI projects will gain a lot of prominence, and that will lead to start of the news cycle, which in turn will be a new chapter for these Indian IT companies. So we believe that currently is a very right junction. The risk reward is quite favorable for these IT companies,
Sure.
and one can actually start looking at these companies from the long-term perspective.
All right. A lot of domestic-oriented and erstwhile favorite sectors are also starting to perform yet again. Look at what is happening in the defense space. Let's look at what is happening in the railway space that absolutely did not perform this entire year 2025. But look at it today. Defense index is up by 3.1%. Look at the sharp performance that we are seeing. All the shipbuilders are up and about. Look at a Cochin shipyard. Look at a Mazagon dock. Look at solar industries. All of these stocks are higher in trade in the last 1 year. Despite all that consolidation and underperformance that panned out, the index is still up by about 18%. Look at Mazagon dock, up by 5.5%. Cochin, higher single-digit kind of names is what we are going to be seeing. 14% higher for Cochin shipyard this year, despite all that consolidation that played out from June till December. And finally, you are seeing an uptick now. Look at Garden Reach, what has happened. I want to ask you, and look at even railways. Of course, we've read out that news for you that the railways have now, probably increased the fee by up to 10 rupees or so for long distance travel. So that's also fueling some fire. RVNL, IRFC, IRCTC, all of them are up and about today. So Sneha, look at these two favorite sectors of retail investors and tell us what's the outlook there.
So see, we are very positive on the defense space because the government has recently laid out the 15-year roadmap. I mean, this was done on the Independence Day, and so this clearly shows the focus of the government over the next 10 to 15 years that the defense outlay will get a lot of impetus, budget after budget, and moreover, we have turned from being a net importer to net exporter. So this opens up a lot of export opportunities in the defense area. So in defense, we kind of the profit booking that we saw over the last few months, I mean, that was quite expected because prior to that there was a sharp run up that we had seen. So the valuations had got a little stretched. So now the correction has made the risk reward a little favorable, and one can actually again start accumulating at these levels from the long term perspective. And moreover, with the budget in the hindsight with just 1 month to go, obviously these sectors railways, defense, they tend to come in focus because obviously the budget normally tends to focus on these sectors. But railways, we are not really very positive because though there are few as you mentioned, the rate hike has been taken, and moreover recently few orders have also been announced in the railway sector, but still we are not really seeing that big bang project announcement which make us very positive on that sector. So we'll wait for a few more announcements or we'll wait for the budget commentary to turn constructive on the railway sector. But then defense, definitely from the long term perspective, we stay quite positive on it.
Okay. Sneha, let me also ask you on the metal story that's gathering some more pace and is shining bright now. What is the sense that you have on the metals story? Of course, like we had played as an excerpt for all our viewers there, in a conversation with Ajay Kedia. In the entire interview, they will get to see how Ajay Kedia is confident that the rally that has unfolded in precious metals may soon now flow into the base metals. Of course, we are already seeing copper prices at all-time highs, and more metals will also see benefit accruing. How are you looking at the metals? Is this the right time to start looking at stocks like Hindustan Zinc, Nalco, for instance, copper-focused stocks like Hind Copper? What would you say?
So see, even we are very positive on metals. If we leave the steel, stocks apart, the rest of the metal space is looking really good. And the reason behind is that overall the geopolitical issues are kind of settling down. So the overall the global economic outlook seems to be improving, which in turn will revive the demand. And on the so that is on the global front. At the domestic front, if the capex picks up from here, then that will also revive the overall global demand. And even China, if you look at, which is the major player, so there they have been curbing the exports to a certain extent. So that will continue to strengthen the global commodity prices, and thus that is what is reflecting in the metal stocks. So both on the domestic front and the export and at the global level, the things are seems to be improving, which is keeping the the overall demand quite positive. And if you talk about the zinc, copper, I mean especially in case of copper, copper has been declared one of the the precious metals by the US government. So obviously that really shows a kind of industrial demand which is emerging for copper, and this copper will continue to gain further from here. So in nutshell, we are quite positive on metals, at least from the medium term perspective.
Fair point. Let's quickly look at wrapping up the markets now. We're a minute to go before we shut shop for the day as far as the Nifty is concerned, and we'll come back to Sneha to address a lot of your queries also, viewers. 26,162, that's in front of you as far as the Nifty is concerned. 0.7% higher, we end near the day's high point. You can actually see the Nifty Bank also inch up 0.4% higher amidst all that consolidation choppiness that you saw through the course of the day. IT stocks definitely, rallied from the front. 1.9% higher is where they are ending at, the top moving sector. Metals followed. You can actually see a 1.9% move on this one as well. 3% rather move that we saw in the metal story today. Small caps also moved up, mid caps also moved up, autos, oil and gas, these were the other sectors that definitely led from the front, but all the sectors managed to post gains by the end of the session. On the Nifty, the top 5 movers are Trent from the retail space. Remember, this is the company that owns Westside and Zudio stores from the Tata Group. 3.8% higher. Shriram Finance, buzzing from the last 1 week, almost a 40,000 odd crore rupee deal with MUFG now controlling about 20% stake in Shriram Finance. Wipro moving up 3% higher. Along with it, Infosys moved up. Tech Mahindra also moved up within the top gainers there. Bharti Airtel from the telecom space also rose in trade. What did not perform? Tata Consumer Products from the FMCG space, that dragged today. Hero Moto. You also had State Bank of India, slight losses that came in there. Life insurance names like SBI Life, HDFC Life, Kotak Mahindra Bank. Indigo also slipped again in trade, a tad bit. Just about 7-8 stocks that did not perform or contribute to the gains in the markets today. But let's get back to Sneha and try and understand what your questions are and what is her advice there. Sneha, the first question coming your way is from Tanisha from Delhi. She says gold and silver prices are at record high levels. So is it best time to buy jewelry or gold finance stocks at this point in time?
Okay, so definitely one can look at the gold finance stocks, but having said that, the gold and silver prices, because they are at all-time high and they have seen a very sharp rally, my sense is that they might go into a consolidation phase or they might witness some sort of profit booking. So let's wait for the let's wait for the right levels, and then one can again look at the gold finance companies, because even the gold finance companies may witness some sort of profit booking once the gold prices comes down a little. So let's wait and watch for some time, and once the consolidation gets over, then one can look at the sector from the fresh perspective.
Okay. Next question is from Amit Singh from Lucknow. He asks you, should I focus on railway-related stocks before the budget 2026? Well, the rally has just kick-started to you today. Do you think this will have legs up until 1st of February?
My suggestion would be, rather than focusing on railway stocks, you can actually look at the defense stocks, because there we are positive that at least even post budget, the rally may, the strong up move may sustain in the defense stocks. Railway stocks, we are not really sure how much the government would allocate the budget, whether it would be it would be kind of a flattish budget, or a higher allocation will be done. So we would rather avoid railway stocks and focus more on the defense stocks. So one can actually look at the fertilizer stocks like SRF, wherein these kind of companies also tend to do well before the budget.
Okay. Next one we have is from Pawan Sharma from Mumbai. He says, which sector offers the best investment opportunity for the new year? Is it real estate, cement, infra or wires and cables? So he's selected a few sectors for you to choose which one would offer him the best opportunity for the new year. Real estate, cement, infra or wires and cables. Some or the other way, these are all related sectors.
My suggestion would be to stick with cables and wires because that's a proxy play to infra as well as real estate. So rather than sticking to only real estate or infra, cables and wires will help you target both these sectors. And since it's a proxy play, there the risk reward is comparatively much better compared to the real estate and infra. Moreover, cables and wires will also benefit from the power sector, from the data center opportunities. So there are multiple opportunities available for the cables and wires companies, and they haven't really participated in a big way over the last few months. So in terms of valuations and everything, there's a lot of comfort, and the given the kind of opportunity which is there in front of them over next 4 to 5 years, the risk reward seems quite favorable.
Okay, fair point. Well, thank you so much, Sneha, then for being with us and of course for addressing all these queries of our viewers and giving us an overview on the markets going forward from here. Good to have you with us. Hope you have a fantastic week ahead. With that, viewers, it's a wrap on the Business Today show, and in case you too have any questions about your investments in mutual funds, your SIPs, stocks or even gold related queries, then please do send them to us on the number that's flashing on your screen. And don't forget to catch the market opening action at 9 a.m. tomorrow morning on India Today.
Markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily